All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up. Don't forget to like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So last week we talked about the possibility of a little bit of right tail risk in the early part of the week. Remember, it was a 3-day weekend, so we had a short work week this week, and we had that sell last Friday. But the dip was more or less bought. You can actually see, we'll go to the cash S&P. The dip was bought. We held the all these moving averages, this convergence of the moving averages here, and we said if nothing really happens over the weekend, nothing of note, there was a strong likelihood that we could see a right tail on Tuesday, which was the first day of the weekend. That's exactly what we saw. So we closed just above 5,800 on SPX last Friday, and then Tuesday we closed at 59.21. So very big move. And again, there really wasn't much that happened over the weekend. I think there was a little bit of a minor walk back on the European tariff talk, and honestly, I can't keep up with it. There's so much that's going on at this point. It's almost just noise at this point. But one of the big kind of talking points this week was the taco trades, or Trump always chickens out, right? And essentially what that's based off of is just basically just buy any tariff news or buy the dip on any tariff news because Trump's going to walk it back and whatnot, and this, that, and the other thing. And again, on Friday, he got tough again on China. He did say after the close he was looking at increasing aluminum and steel tariffs, I believe. There was also, I think there was a crackdown on chips, and just a lot going on this week. We also had Nvidia earnings that did not really perform that well against. We gapped up after earnings, but it actually closed the gap the next day on Friday and did close positive for the week. But again, we talked about that 140 area, and I said that was probably going to be it, and essentially that's all it was. I mean, we gapped through. We got to 143.49, but we closed below, basically closing, just slightly positive on the week, or up 4 points to be fair, but it did close basically where it did before earnings. So that was kind of a nothing burger. That said, another point that we really hit on was, and I'll flip over to ES right now. One of the points we really hit on was, as long as we're holding, 58.50 and then really 5,800, and then kind of to look at SPX, if you like that to follow more than ES. I said 57.50, kind of like max downside before we could really see the chart see some damage. And again, it's not necessarily like we're going to crash or anything if that happens, but we would that would open up the door for more downside, possibly to go fill the gap. And we didn't, right? So pretty much every dip was bought. Here, put the lines back on. Pretty much every dip was bought, and right now we're just inside of Tuesday's gap higher. So 1, 2, 3 inside. We had a sell on Friday. Take a look at the intraday. Slice down, buy the dip, slice down, big dip buy at 58.50, and we rallied into the close. End of month, a lot of end of month markup, I think, going on there too. So again, strongest month of May, I believe, since 1990. Strongest performance for the S&P and I believe the Nasdaq. Don't quote me on it, but it's been a long time. It's been like 30 years. So the strongest month. We can take a look at the monthly candle as well. Look at that April candle. So it's pretty remarkable. And then just right back up here. Basically, ultimately, what we're saying here is, as long as we're basing up in this range, I think we're poised to challenge that all-time high, probably in mid-June, maybe even by the quarterly. So again, I would say maybe another week or so, if there's no damage to this chart, the path of least resistance is going to head towards challenging that new high. Now, what happens from there, that's anybody's guess at this point. But right now, the market's acting well. It's acting well in the face of bad news. We had some, shaky at best data this week. We had some stagflationary data, and the market's, dips being bought. So again, you can't fight that. And if the chart starts to break down and we start to see, problems, then we can determine that the macro matters. But until that happens, this market can still go higher. We do have jobs this week. So pretty much a full jobs week. I don't think there's any significant earnings really. Pretty much got through all of that. But yeah, jobs week here. So we have catalysts possibly for a breakdown or a breakout. But again, as long as we're holding this general range here, this is just bull consolidation here until proven otherwise. That is my base case right now. Let's take a look here at the triple Qs. So again, we talked about 520 being kind of a big equilibrium, and yeah, we closed just off of that on Friday, and we traded through that pretty much all for the last 2 weeks here. So again, we're basing here. We're what's this, like 2% or 3% here from the all-time high. It's not that far off. If we look at the NQ, you can see again this trend line here. We've traded through it quite a bit. So this is the bull market trend line, and that's even marked some intraday pivoting. If you're following in the trading room, we've talked about that quite a bit lately. But again, 21.7 right now. Once that is cleared, we should go up and challenge the old high. So again, really, I think barring a breakdown this week, at the end of this week, I would think that we should start pushing up. So I would say I would give the bears like another week here. You got jobs data, so if they can't push it down after that, we're going to probably be looking at by end of quarter, at least within the range of double top. IWM here, again sideways. Last 3 days of the week, just like everything else, it held the gap up, and we're watching this for a possible inverse head and shoulder. So you get your left, and then your right here. It hasn't triggered, so it still has to clear. I've got this 210 level marked here. That's from a long time ago, but I'm not even sure where. That probably goes back. Yeah, that goes back to 2020 if I'm not mistaken. Yeah, it goes all the way back here. So you know what we can do with that is actually, let's just line it up. So we'll line it up right there because that's where our neckline is. So we'll just say 210. All right, we'll mark that right at 210 even. And we'll say once we clear that, that triggers that inverse head and shoulders, and that's a big move waiting to happen if that does happen. So IWM holding up. Dow has the same look, right? Same exact look. So there's your neckline right there, right at about what, 428.50, right in that range. And you can see the big move here. Stocks come way off the lows. We talked about this last month. But yeah, hedge funds here shorted ETFs, US ETFs at the fastest pace in history, and that did not work out. So basically, this is the base case for the rally that I've laid out for the last month or so. But they shorted into the hole, right? Here's the beginning of April, right? There's March 31st. So you got your big swoosh to the downside, and they tried selling this rip here, and when everybody has the same idea, everybody's piling into the same trade. There's nobody left to buy, right? And it goes higher, and that's why we've seen this rally here. Amongst other reasons, of course, some of the things getting priced in, but short squeezing has been painful for those on that side. SMH here down 1.7. It kind of violated with that gap down. It violated this flag here, but we got right back inside a range. So I'm just gonna leave it on. It's not like it's not the cleanest. If you look at like a 4-hour or even an hourly chart. Outside of this gap down and outside of that gap up, it's basically been in that range there. So we'll just leave it on there, and it's still bullish. So it's holding the moving averages and it's basing above them. Got a lot of resistance up here at 260 though, like a ton, right? So if we go back to a year ago, anybody who is a buyer, I mean, really, even where we're at right now, like anybody who is a buyer above 250, 260, they're underwater, which is hard to believe. Right, because chips, chips are like all the rage right now, but they have gone nowhere for a year. And I talked about this again, not to take another victory lap on it, but cloud software, again, not that far off of all-time highs. And since then, I talked about cloud software. I said sell chips, buy cloud. Back in June is when I talked about this, and you can see they have significantly outperformed versus chips since then. Software is a big thing. Cybersecurity is a big thing, by the way. Speaking of cybersecurity, Zscaler. Breaking out of a range here, reporting earnings this week. You can get rid of this old fib. But yeah. Anyway, IGV. Again, nice bull pattern here. And that looks poised for breakout soon. Transports, again, we talked about this last week as well. It held the inside bar low. We tested it on Friday. It held, and then we just consolidated inside. Similar pattern to the Russell and the Dow. Again, left shoulder head, possible right shoulder building here. It's not the cleanest, but it's definitely there. It definitely has a similar type pattern. All right, one thing that definitely helped keep stocks buoyant this week was interest rates, and specifically on the 2-year. So this came down Thursday, Friday, and we did have some data, some GDP data, and PCE ended up kind of being a little bit of a nothing burger, but we got a gap up on Thursday, and it was kind of a gap and crap here, and we closed below that breakup bar low on the 2-year. So you can see the low here was 3.91, and we closed at 3.9. So that's a failure. And I talked about this right now. As of right now, they're pricing in no cut for June. This is, I think, what's like 3 weeks away now. This OPEX week, so it's like June 18th, I think, is the Fed meeting. That said, bonds these days move like meme coins, so they can move fast. And I would say right now, again, I'm not a banking expert, but I would say if we get below 3.8 and we hold below 3.8 by that point in the next 2 weeks, I think the Fed cuts. Is it a big deal? I mean, 25 basis points at this point is basically nothing, but it's something. And I think we also have to think about, I talked about this with Infra, who's actually on the show here recently with Jason, and we did a little interview a few weeks ago. But Jerome Powell's legacy here is the guy who didn't raise rates while inflation, it's just headline CPI was at 8 to 9% for like many months. He didn't raise rates, and he was continuing to do 120 billion in QE, right? And then now he's the guy who cut twice in front of an election for the other party. Remember, Powell's a Republican, right? He cut while Biden was in office, and now he's essentially being a hawk. When the 2-year has been below Fed funds for 7-8 months now. Now, it's not like ridiculously below it, but it is. And if this starts, really going down, I don't think he wants to be the guy who didn't cut when needed, and the guy who raised when not needed. So he's got a legacy to think about here. Nonetheless, long end came down as well. I think too many people just jumped on this trade. I do think the long end ultimately will go higher. It's just a math issue. But right now, it did back off. I think a lot of people jumped on the short bond trade, and these cup and handle patterns. This is the 30-year here. Again, this is a textbook cup and handle. I mean, like it's strong, right? I mean, you had a big downtrend. We broke out of it. You got this nice like higher lows, right? So it's ready to, it can break out. The thing is, I just want to draw your attention to, I've talked about this a few times before, is that, we'll talk about gold in a minute. I know I'm going off on a tangent here, but these cup and handle patterns can take longer than you think to break out. So again, even with gold, right, this was a big cup and handle, right? And everybody thought it was going to break out right here. It took another 2 years. I'm not saying that's going to happen with rates. I'm just saying it can take longer than you think. Because they're patterns that everybody wants to be a part of. They want to get on that because it's so good, and you want to get on that breakout leg. And so it's hard when everybody buys the breakout and positioning gets stretched to one side. It's just hard to break out. So it does take time. It can take time. Ultimately, I think it will, but who's to say it doesn't happen in a year or so? Just food for thought. Anyway, back on track here. XHB. Down 67 cents here on Friday. Kind of weak daily chart, so housing not participating that much in the rally. Again, those high-end those long rates are hurting, but the real estate, like the REITs here, are acting okay. They are participating in the rally, and if this can break through, 90 here on VNQ, it can try to challenge 92, 94. So I know I have a lot of lines on here, but again, you could even make a case that this here is not the greatest, but if that can break out of this range, that's kind of a bull flag, isn't it? It's not the greatest, but it's it's something. So it's performing better than XHB. We'll see. Maybe they do another bailout program for housing builders. But anyway, XLF again, like everything else, gap up sideways this week. Financials look okay right now. KRE and KBE are a little bit softer, but they're still hanging in there okay. And of course, everybody's favorite, the broker dealers, just off all-time highs. Those are hanging in just fine. Oil sideways week. I was surprised. We had a lot of OPEC chatter this week. Lot of bearish sentiment here, and I think that's still, you know, a catalyst for this. If we can get some sort of a, you know, macro trigger. If we take a look at oil here, I'm not looking at the daily, but if we look at the 4-hour, or we're just going to look at the Bollinger Band width, this is ready to break out. You know, in the short term at least, like this is really tight here. So you can see the bands when they get tight, that leads to expansion, right? There's only so long they can be this tight for before you get a move. Now it doesn't mean we have to go up or down. It just means a move is coming. So this is compressing here. I'm guessing it's up. If we take a look at XLE, you know, right, the stocks, the equities tend to lead. This still has, you know, it wasn't the greatest week here, but it still has higher lows. And you look at XOP, same thing. It's got higher lows, so it could be leading the market here. Energy stocks are so beat up and they're so hated right now. I don't love the charts. Don't really love OIH as much. XLE and XOP are better, but sometimes these, you know, when things get too hated, they can really rip the other way. So we'll see if that ends up being the case. I think it's possible. Nat gas here. So this looks like a bull flag, but it actually just had a contract roll. I believe we're on U, or is it sorry, N. So N here, and yeah, little weakness on the 30th here, and not the greatest pattern. We'll see. It's got to hold this green bar here. You can see on the continuous, it looks a little bit different. It's kind of in the same area though. So right around, we'll just call it 340. If it holds that, it's okay, but a break of that could send us back towards 3. So just be careful with nat gas here. Dollar index, kind of a wacky week. Again, you know, there was the news on Thursday about, you know, everything getting, you know, the court shooting down Trump's tariffs. We had a little bit of a gap in crap. The market realized that there's other ways around that. So not really, it ended up kind of being a nothing burger. The dollar yen though, again, is still, and we're watching this closely here because it did have a green week. You know, it pumped up Monday and it held, but you basically got rejected at the 50 MA here. That's not good, right? It's a simple TA here, 50 MA blue line, right? It's basically been rejected every single time. Like we got it through there, but it was a fake breakout. We got through there, but it, you know, closed below. Just be careful with this. That you know, this is a possible risk here going into the summertime, right? Japan's largest life insurers are, you know, suffering unrealized losses, but right now, I think a week ago, the BOJ kind of like basically deferred on their decision. I think things are okay as long as we're above, you know, you can take a look at the weekly here. You know, as long as we're above this 140 area, I think we're okay. But if this starts cracking, that's something that could cause problems in the equity markets. That does pull liquidity out. Right now, we have a very liquid market, right? What did I say the whole time, right? Dips are being bought, dips are being bought. That's something that could cause that to stop. So keep an eye on that 140 area. Anyway, gold here, again, a quiet week. Nice flag. This looks fine. You got silver here consolidating as well. The only negatives I can find right now with gold and silver are, it's not even a negative. It's just that seasonally, we kind of tend to back off a little bit in June. There's silver and gold. And you can see they're kind of right on schedule, right? I mean, we topped out in May and we've been pulling back a little bit. Silver topped out in April, been pulling back since then for the most part. And yeah, we might just do a little bit more of that. Now, I do want to also show you this. This is our dashboard here at Carnivore Trades here. And again, you can see just to show you dealers, how they're hedged for June OPEX. So anything to the right of the middle line here is supportive, right? And you can see here, The orange line inside of the green is very supportive, pretty much across the board. This is very good here on silver as well. So if we get dips, they're likely to be supported is what I'm trying to say. So, you know, we go back here and look at the seasonality. Yeah, maybe end of month could be a good time to accumulate. So I'm kind of putting that, trying to piece that together. I don't think that there's a ton of risk here, but just timing wise, maybe closer to the end of the month. But silver, it looks like it wants to go to 40. Platinum had a nice breakout last week. It did retrace. I would not buy it here. And the reason for that is it has a lot of these spikes and then comes right back in. What I need to see is consolidation. It needs to tighten up. Prove to me that you're consolidating and not just a short squeeze. But you can see it came in hard on Friday. Palladium didn't come in that hard, but it did fade the whole move too. So I haven't touched these. Now I've not touched copper either. This pattern is just a complete mess here. I do not like it on either side, really. Bitcoin, that did pull back, so that was actually a little weak this week. It is off the lows right now. You can see this is a weekly chart. Bullish if it can reclaim 106 by tomorrow's close. It is bouncing today. It's not necessarily bearish if it doesn't, to me. Normally, I would be worried about a failed breakout. But you got to remember, it was up 7 weeks in a row. Look at this is at 74,000 7 weeks ago, and it's at 105 now. It went up to 110 basically. Yeah, almost 112. So that's like literally almost 100%, right? It's like 85% in 7 weeks, 8 weeks. So, you know, it's allowed to pull back here. Where it would be a problem, where I would worry about it is if you got a big outside candle, like especially next week, with volume behind it, then I would say, okay, there's a problem here. But right now, it just hit the all-time high. It backed off. It's holding on right now. So we start losing these lows, though, you know, 100,000 or so, then, you know, it's probably not ready to break out for sure. But right now, it's hanging in there. So again, overall with the markets here, you know, as long as we're just kind of holding this range and tightening up, you can actually see here we're kind of like tightening up right now. You know, I think by the end of the week here, as long as there's really no damage to this overall structure, and again, it doesn't have to hold that triangle, but as long as there's no real damage here, no breakdown, I would look at a challenging of the all-time highs by end of June, but we'll talk about that next week. So anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to come find Jason on Patreon. Come find me on conovertrades.com. We'll see you guys all next week.